Spate or surge trading strategy in crude oil futures. This price spate and surge happens during 10 to 20 times during a year. This can be caused by geopolitical developments in energy industry, natural disasters, climate change, and emission restrictions. Any sensitive news that has an impact on the oil industry can cause huge price changes to oil futures. Sometimes this change doesn't have any solid aid for continuing the status quo created by the information. This can create a trading opportunity for a trading window. Usually, it comes to 10 to 20 times in a year. As there is no way to predict the event, one must constantly in touch with the crude oil market and its related events. Some of the steps that can be taken to zero in on these events to find opportunities are: constantly watch the price of the crude oil for the any surge or spike above 5% or more. Find out the reason and read more about the issue. List the untraded prices. For example, if the crude went from 40 to 45 in a matter of 2 days and without trading in prices between 40 to 45, and it seems to saturate at 45, if previous trend is opposite to the surge, then there is a shorting opportunity window in positional trade for the trader. These situations usually create where there is a good payoff for the risk involved. But the real task is identifying this opportunity. Now let's look at the each step in detail. Spate is identifying a 5% or more travel or downside or upside on the prices of crude oil in 1 or 2 days. Let's call this Y. Now the next step is reading about the finding out the reason for that such surge, and it is very important to read about it. You have to make sure that there is some correlation between what you have read and what the price change that happened. And that is a spate or surge. Then next step is finding out the previous trend. What was happening before this spate or surge happened? Let's call this K. Then we have to find out the untraded prices. While the spate and surge happened, there may be some prices which were untraded. Now let's look at how the decision is made. If the K and Y are opposite, place the trade based on K. If the K and Y are aligned, then place the trade on Y with caution. This K and Y are directions, like what was the previous trend and what was the Y is what is the present trend, and K is what was happening before the Y happened.